Okay guys, so this is going to be the first strategy to do it, and just to recap, why do we have strategies? And we have strategies to increase our odds of having a winning trade. Not every trade is going to be a winner, but to increase our odds that we will have more winning trades than losing trades, or that the winning trades that we have, risk to reward percentage, is enough that even if we have more losing trades than winning trades, we still end up in profit. So the first thing I want to mention is, it's quite obvious. Let's actually look at a chart. There is something very evident just by looking at this chart, and that is that price moves in waves. I said in one of my previous videos that where it was, well, I can't even remember which one, but price when going up will do this, this, this. Then when it goes down, do this, this, this. Now, I promise you, every single strategy in the world, I might be corrected, but I'm quite sure. Every strategy in the world is going to be sell here, so you want it to go down, buy here, sell here, buy here, sell here, buy here. Depending on your time frame, this could be that we want to do it over day periods, hour, 4-hour periods, 1-hour period, 15-minute periods, but the price moves in waves on every time frame when in everything, and you need to catch these ones as soon as possible. If you got in here and got out there, you had a perfect run with this one. If you got in here and got out there, you had a perfect run. However, it's still not too bad if you got in there, got out there, got in there, got out there. As long as you are making your risk to reward, it doesn't matter, but we try to get as much money as possible as the trades go through. Let's get rid of those squiggles. So if it does this, now actually look on a live chart, so you will see over here, price goes down, goes up, goes down, goes up, goes down, goes up, goes down, goes up. Now, price makes patterns. It's the same patterns over and over and over again that you will see. So there's a couple of different strategies that I'm going to explain to you, and the first one is trying to get the last impulse of a wave. So go back here, let's just open up another page. So in here, if I know the price is going up, so I assume the price is going up and comes down, because we know it travels in waves, we want to take a bet. That's what it is. It's an educated bet, but we use our indicator setter to increase it. We want to say, is bet that this one is actually going to go up rather than continue down and now create a down path. That is what we are trying to do, is catch it at the bottom and goes up. So this is an impulse. I think in Elliott wave they call it an impulse wave, a correction wave, and an impulse wave. And in Elliott wave, I think they do 5. It's ABC. Again, I haven't had enough time to master it, and it confuses the hell out of me. But they say basically it moves in 5 stages. ABC wave and whatever, before there will be a trend reversal. So if we can catch it here, and we can catch it here, we've made money. Okay? If we can catch here, sell here, and catch it here again and sell here, or we could skip these two and just take it here and sell it there. That is also an option, but you'll get far better rewards by selling here and doing this to go and do it. So the strategies is, how do we figure out when to take, let's pretend it was over here. How do I know I want to, let's do a little drawing tool here. Actually, let me just move it so at the top here. How do I know that I want to take this wave here? How do I know when it's the end of this one and it's about to be the next one? And then if I wanted to do it and it went this way again and the price went up, how to do it again? Goes up and up, how to do it again? How to do it again. Some people trade do trade the actual retracement. I don't for this one. I might do trades within a retracement, but then I'm doing a different strategy in a closer time frame. But when doing this one, I don't, but some people do and can be quite profitable. Remember, I'm just giving you guys ideas. You guys over time will develop your own strategy and your own tweaks as to what goes, and that's it. You don't always want to do what I do. My way might stop working at some point in time. So we want to make money there, make money there, make money there, make money there. Then we want to make more money, more money, more money, and down again. More money, more money. That's the goal of what we want to do. So let me remove squiggles again. Okay. So if that's what we want and we know there are waves, so we know that this is an impulse because it's a downwards trend. So this is an impulse, correction, impulse, correction, impulse. Okay. This one went higher than the other one. So this one was a weird one. Because normally what you would be able to do to try and determine this is this high would not be higher than this one. Remember I said a downtrend, it's lower highs. So he has a lower high, he has a lower high, and lower low. So lower low, lower low. This one did have a lower low, higher high. Here was a potential option for reversal, it was a higher. So it could have potentially not, but it didn't. So we can count that as what they call a fake breakout. We'll get into that with another one when I do a trend line for you in another video. But pretty much impulse, correction, impulse, correction, impulse. We want to make money on the impulses. You can try and do corrections, but I'm not going to show you that one. We're trying to get this one. So first of all, this strategy I run on the daily time frame. You can go and try and check confirmation from it on a weekly time frame that it is in a downward trend. So go here. So we can see over here, if I happen to be over here, we can see the weeklies also a downward trend. Now one in theory, by the way, could do this weekly, go impulse, correction, impulse, correction, impulse, correction, impulse. But again, that takes a year. So no, not for me to trade on, to physically do trading on a weekly time frame. But on daily is sufficient. But also remember, by trading on the daily time frame, you are also making your trades potentially take days. I had to pause and move inside because my son decided to want to use the trampoline. So we want to see how we are able to detect this correction in order to catch the next impulse. That is the trick of what you want to do, and the impulse, correction, impulse. So the way I've been instructed or learned or practiced or whatever to do is you use the Fibonacci tool. That can be found, this is your favorites that you add, by the way. In one of these menus there is a tool for Fibonacci. I should have actually tried to see if I can find it before. Elliott wave stuff. I haven't even played with everything that is in here. Fib retracement. So it's under here, Fibonacci retracement tool. I've added it to my favorite because I use it all the time. And so that's here. And how to use the Fibonacci tool: you select it, you click at the top, and then you go click again at the lowest low of the impulse. So you would do this after you see that there is starting to be a correction. You would go find the lowest point, you would select it, and you will then see some values. Now I'm just going to go and do my screen go on here so you can see the settings for Fibonacci. You can duplicate this one to you. I've removed the others, the defaults. I can't remember what the defaults were, but I leave 0.382, 0.618, 0.5. I don't think 0.5 is on the default. I put 0.5, 0.768, and then leave on -272 and -0.618. So make yours look like this. For that, I'll leave it open for a couple more seconds. Well, actually, I don't have to. You can just hit pause, and you can see it. And this 0.618 is the golden ratio. I'm not a Fibonacci expert, I just use the tool, but this is where we expect perfect retracements to go to, but they're not meant to go above the 0.7618 from that. But within this time frame, we want to calculate or start see where the reversal is going to happen. So the first rule of thumb over here is you cannot count it as a retracement if it hasn't hit the 0.382. If it does not hit this level, so let's drag it further. If it didn't go up and retrace at very least to 0.318, you cannot count it as an impulse. Okay, so that's rule number one that you have. So when it gets to 0.318, now we know we have got a valid impulse and the correction is happening. We then monitor the correction and try and find signals within the correction that signal it is going to then be a downward path. So for here, I'm going to do that in a separate one, and then see again we'll do, let's move this back so it doesn't complicate it. So 0.618, and if now to this we caught this wave. After this wave, this correction, if we did the Fibonacci again, and you see it did go up past, and this time it went to the golden ratio. The next one, as I said, from looking at the chart, you are going to see that it continues up. Over here though, it went well past 0.7618. Some people might have accidentally taken trades here. Look at it. It did do another push up. It did go down. However, this normally would have signaled a reversal, and it would have started doing this and go up from here. But it didn't. It did go down for another wave to try and see. But even if we did have a loss here and we got these ones, we would have had 1, 2, 3 wins. One loss is not too much of a problem. And I'll get into more detail. So rule number one of impulse correction impulse is that we want to on the Fibonacci drawn from the high to the low, it must pass the 0.3618, which it did. As soon as that is done, I now in this strategy we switch over to the 4-hour view, and inside the 4-hour view there are two indicators that I use over here. Probably too low somewhere. Okay, actually, let me go back to the daily. I just want to see. And let's hit the replay button. So we are over here, and we determined it went to the 0.3618, so now we can switch over. And templates, and inside here I'm just going to add 4-hour. So inside here I'll explain the indicators afterwards. So we know that this is the impulse, and we are busy building the correction. It might stop here and keep going down. However, we are going to assume it's going to keep up, so we want to monitor for signals. And the easiest way to do this is to use a new indicator. It's called MACD, or oscillator. It might be more correct. Indicators, MACD. MACD. There is a MACD strategy. I don't know it. I actually would like to look at it at some point in time. But let's add on the MACD. It's under indicators. You could just search for it. Now, what the MACD tells us is, I can actually minimize this. So what the MACD tells us is, are we in a bullish or a bearish trend? So over here we are in a bullish trend and this is based on the time frame that you are currently in. So in the 4-hour. So Here we can see we were definitely in a bearish, so sell, 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 sell. Here it showed signs of going up, and then on sell that. But now we're in a retracement. So the easiest thing to go and see here, the MACD is above the 0. So the MACD, the blue line. So the blue line over here has now just hit the 0. You'll see the 0 over here. While that is above the 0 mark, it is in a bullish environment. So it's going up, which we know it is, and it's expected. So now what you're going to do is when you hit play, I'm going to say forward. So you'll see the MACD is still climbing, still far away. So what we are now waiting for is we want the MACD to go cross the 0. And you'll also notice as we did it to my EMAs, my 15 EMA closed above all 3 of those, also indicating we are now in a bullish environment. And we are just going to play, and you see it went up. So see, it went here, it was already going down. However, the MACD didn't cross the 0, so we definitely were still in a bullish environment. We'll go forward, and going down. MACD still above, MACD still above, MACD still above, MACD still above, MACD still above. Okay, MACD is now below. So now the blue line has just passed the 0 mark. So now I am willing to say we are now approaching a bearish environment again. So we are expecting the market to go down from this point in time. Don't know, it might go back up and it might go back down. So we need to see that it is down, but we want to know where our stop loss and our entry point must be. So now remember, everything works in impulse corrections, etc. So my assumption is over here, because you'll see here is structure. So here is structure. The MACDs are close to below the 0. Here is also structure. I'm expecting this to go down a little bit more, come up to hit structure, and then continue down. So because everything works like this. Remember support and resistance. So that is my expectation of this in the 4-hour chart. And now obviously we've seen the chart, so we know it is going to go down, but we are trying to find where is the correct entry point for this. And I am going to go and just back that line. So I'm going to put in my order. I'm going to do a short position. I'm going to do a short position from here, so somewhere within this range. I'm going to put my stop loss above the 0, above the high. This above the high over here. We'll get into a bit more of a strategy later there. And I am then going to put my target at 1.3. Another nice way to make target, this I have learned from someone else, is on the daily chart where we have it. Once you have determined that your resistance, where you are at the end of your impulse, you can take the Fibonacci and now do it from this high to this low, and your target is the 0.72, and then just move it a little bit above that. So we are going for a 2.57 at this point for target over here. I am going to zoom back down to 4 hours. 4 hours, zoom back in here. To go in here. And because I like a risk reward of 1 to 3, I'm going to move this over here to just above this high. So I'm still above the 0.768. So if it has to go back, it would. If it goes to retrace here, it's I've got something wrong anyway. So as long as it is above here, you should be fine. So I'm going to leave it a little bit above that structure, so I still get my 1 to 3 risk reward. So this risk could be $1, $10, $1,000. It may not be more than 1 or 2% of your account. But we are going to just 1, 2, 3, and now we are going to hit the play. Okay, and now at this point, well, actually before this point, when it closes above the next bit of structure, you set your account to risk-free. What that means is you go and change your stop loss to break even. So I'm just going to move it there. So your stop loss to break even. So if for some reason it didn't go all the way or something went wrong and it shot back up, yes, we wouldn't have got this profit, but we won't lose money. And now we just let it run. Some people take some profit here now, so if it does go back, they make something. This strategy, I don't. I'd rather make nothing or the full. And then forward, 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 goes back up. And there we go. Hit the target of the 1, 1, 2, 3. Maybe it wouldn't have been the end of the world when you saw it get here to sell it, especially when you saw there was 2 candles going up and then the last one down to actually get out and make it over there. But we have made 3% on our account for this. It did take a couple of days for the trade to happen. If these are all 4 hours, it was from February 5th to February 15th, 10 days that it took for the market to go down, etc. So in 10 days, you have upped your account by 3%. I'm going to do the next strategy. I'm going to do another one of this as we go, just so you can see on the next one. Let's go back to daily. I'm going to leave this one there. Hopefully get a losing trade as well. Just so that you can see that you are going to lose with get lost trades. You're gonna. Then let's go hit play. So we got the full impulse from here, and we're going into correction. So now we see impulse correction, so the exact same as what we did before. We are going to, from that high to that low, we passed the 0.38. As soon as we pass that one, we're going to switch back down to the 4 hour. And in the 4 hour mark, MACD is well above the 0. So we're definitely still in bullish. And we go forward, 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 forward. MACD still above, MACD still above, MACD still above, MACD still above. MACD's coming down, and MACD is crossed below. So inside this one, we now have the MACD below, so we're going to go back to the day. We're going to find our target. Our target is going to be from this from here, from this high to this low, and our target is going to be here. So it wasn't as much of a retracement, so our target is here. Go back into 4 hour. The nice thing about working these ones is not much of a rush to pretty much everything. So now it's crossed over, and here in the 4 hours, let's make this a little bit smaller so that we can see it. There is structure over here, and again, remember, it went out. I'm expecting it to come back and then buy at structure. So at the structure mark, we are going to do another short position, and I'm going to place it over here, and I'm going to put my risk reward just above the 0.7618. Let's go to our target. Our target is here, just a little bit above. So there is our target, and now we have a risk to reward of 123.7. So if you wanted to be a bit more cautious, you could move this up as long as you get your 123. That's fine. Or you could take it, you could be very risky and put it here and go for a 1 to 8, 8%, but there's a good chance it's going to get stopped up. But let's pretend someone put it over here. I'll put a line there. If I put it there, you would have got a 1 to 8. So let's put it here. 1, I like being cautious. 1, 2, 3. Let's put a line over here. Let's pretend someone wanted to try that 1 to 8% risk reward, and let's see if they would have got stopped out and lost the percent. Down, 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 down. And sometimes it's very annoying. It doesn't come up and test. I would have missed this trade. Okay. So MACD crossed over there. It went down, went up, and plummeted. So one could, in theory, still have been in here by having just gone in, counted when the MACD went to 0 over here, went and bought. Normally it'll do this, etc. So depending on your training style and strategy, but all I know is if someone didn't get in on time, they probably would have did FOMO and try to join in later, maybe join in here, go up, hit their stop loss, go down. There's a lot of things that could have happened. I have other trading strategies that would have given other signals that you can still join in a little bit later, but this strategy worked. Is I probably would have missed it because it didn't come back, it just melted away, but this one plummeted down. So 1 to 3 was quite easy, and if someone did take that 1 to 8% over here, when I did it, you'll notice it didn't go up. They would have made 8% on this particular trade. I don't recommend doing this. You'll get stopped out more often than not, but at this reward ratio, you only need to get one or two trades out of every 10 and you've made some serious money. So again, you must decide. I'm giving you the rules of how I do it, and I like a 1, 2, 3 on this, but it's 100% up to you. Again, let's rinse and repeat. Go back up to daily. So now this one really went down far. There was probably a news or something. Oh, by the way, TradingView shows all the news coming up for that, and if I went back, there was probably a news over here. Hang on, what was the 7th of March? What was the 7th of March? What day of the week? March. So this was this. Would have this actually been the 2019? That would help. March the 7th, 2019 was a Thursday. Some news came out and it shot this. That is beyond a normal candle for 4 hours. There must have been some news as it progressed, and directly after that it is coming up. But now we switch back up to daily, back into daily, and we're going to rinse and repeat. And you see it literally spikes back up. It climbs. This is over the next 4 days it goes through. So if we were doing this, and let's take this Fibonacci, no, not you. Actually, that one we can delete. Take this one, that one's high, to this one's low, and it's past 0.618. So now the theory is you would be in 4 hour looking for the MACD to become bearish, and not bearish, 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 and it goes, and it goes, and it goes. Whoa, it goes up lots more. Now you'll see it went here. Now it went well past the 0.7618. Normally I would say we are now invalidating the trade. We know, we've seen the chart, it is going to go back down to the correct point, but this normally would have invalidated the trade. However, if you wanted to stick with rules and still go for it, the MACD is still above the 0, still above. MACD went below. I was pushing too quick. MACD still above, below. So the MACD is below. Now you'll see here we're quite far past structure. So here you must decide on your risk to reward that you would like to do. Let us first go back to daily, find our target. Our target, we can be done with you. We take our Fibonacci from the high to the low, from the high to the low, and our target, as you can see, is quite far away from this one. So if it went this way and it wasn't reversed, because remember, this could be an impulse correction impulse, because this one was higher than this one. So maybe we're, instead of trading down, we should be trading up and actually checking, is this a 3.618, and waiting for it to turn. So you could do both, as I say, plan for each one. One of them is going to be a loss, one of them is going to be in profit, depending. It's up to you. You've made 6%, so to lose 1% or 2% is not going to kill you at this point in time. Then from here, let us do so. If here's our target, we then go and back to the 4 hour. We will take our Fibonacci. Fibonacci, not Fibonacci. We want to do a short. I'm going to do a short. Here is structure, so we can see where's structure. Now, normally people are going to, especially if they've missed the last one, want to go and say, we will go in here, or so, which you can. It's just your risk to reward is going to be potentially diminished. However, the here is structure at this point in time, so I'm going to say put it over here to match up with this structure, and it has made its own structure. And my risk to reward, I'm going to put above this high. So as you can see, the structure over here. So I've got quite a big stop loss, but we know from our target we have a very nice risk to reward. If I wasn't mistaken, just above. So it's a 1 to 2. 2.3 risk reward. You must decide if you want to take this trade or not, or you hope that it comes back and retraces for a 1 to 3 reward, or you can leave it here and reduce your stop loss. I'm going to leave it here, and I am going to increase here and say I would like it to retrace to that bit of structure before I'm willing to enter, to give me a 2.92. And I'm willing to, yes, I've got a 1 to 3 risk reward. And next, I'm in. I would be break even long ago. And by the way, if the other strategy was that this was the retracement, it would have just come here and hit break even. So you wouldn't have lost money on this trade. But yes, so still looking positive. If we had break even, oof. We're dancing, and still dancing. Over here, I probably would have sold out, or over here. It got close enough for me. I probably would have sold out there. So let's bring this in, and I would have made a 2.83. 2.83% on this trade. However, I do not know. Okay, so it does seem to be going up. Let's go back to the hourly chart. Sorry, daily chart. Daily chart, we've got we got our targets over here. You did see it almost come on some people, depending on spread or something, might have taken you out stop loss. To that, you win some, you lose some. Take it, don't get emotional about it. It's not worth it. Now, however, our new Fibonacci level for the target, we are not going to take from this high, because there was a high over here. So our new potential target, if we wanted to do it, would be from, so we have scored this one. This was a 1 to 2 2.83. Okay, let's just leave it there. So now we're going to take a Fibonacci, and we're going to take it from this high to this low, and it's already traced to the 0.5, so we can start looking for potential more shorts. Long fib 4 hour, and we are looking for the MACD. It's now crossed above. We are looking for it to come back down. MACD went below. Over here, it's at structure. If we were watching it more closely on the time frames, it would have come to it. This one I'm going to take the short. And our target, because we know it was from here to there, 0.7812, so that is our target. We're pretty much there already. It's a 1 to 2.63. 1, 2, 3. Woohoo! And I'm out. I lost 1% there. I should have not been too eager and counted that, just like I was correct here. I should have taken that as the structure, let it retraced. Let's pretend I did that and now entered again. And just because you lose over here doesn't mean it makes the signal invalid at this point in time. MACD, however, is above the 0, so it is not bullish, so we are not going to go in. It is now crossed below again. So again, we are going to say it must come up and hit structure. Nope, short. And structure is there, above that high. Target is still the same. And next. And out. And it keeps going, making this trade completely obsolete. You've lost 2% on this trade, so obviously something is changing on the pattern. Go back to the daily, and we will see it's not a very clear anything at this point in time. So those ones will take our 2 lots. However, we have made 369%. To lose 2% is perfectly fine. You don't have to cry about anything over here. And now you would wait until you see some structure. An ICI will definitely be a big impulse. And you could maybe say that this was an impulse. Still an impulse. Still an impulse. Okay, impulse, correction. Impulse, correction, and that one you would have lost. Here we had impulse, stay out of it. There's other strategies I'm about to show you that might catch those. Impulse, correction, impulse. Impulse, no, not there. Impulse, correction, maybe. If you did it correctly, your stop would have been high enough. So yes, so that is a surefire way to do it. And as it says, 1 to 3, you only have to win 3 trades out of every 10, and you will still make money. So there's strategy number 1. That is over here. Please, guys, don't just go and start doing this. Go back test it yourself, or test future live on a demo account. Do not go. Do believe, I don't know, TradingView's free one. I don't know if it allows you to replay the stuff under a daily or only over a daily, so I'm not too sure. I don't know if you'll be able to backtest this on a free account, but that is up for you. Once you guys have made some money on trades, by the way, I recommend that you get a pro version. It comes with a couple of features, etc. And if you're going to take this seriously, the money's not an issue. You should be making more than enough of it. So that's the end of strategy 1. I hope it was successful for you guys, or you learned a lot. And let's take it on, and the strategy number 2 will be in the next video.